Welcome back to Taxation is Theft, the show that talks about all the ways the government is ripping you off and what you can do to stop them. Broadcasting live on Facebook and YouTube from an underground bunker deep within the jungles of Mexico. I'm Dan, Taxationist Theft Berman, former candidate for president of the United States, currently in the race for governor of Texas, and we're about to step things up this week. We've got some really amazing stuff coming up as we tour Texas. But today, I have my good friend Alex Merced. He is the former vice chair of the Libertarian Party and the best chair ever of a Libertarian National Convention. Yes, I said that. Best ever that I've been to anyway. Also, a professional Wall Street trainer who trains traders, that's a mouthful, with ethical libertarian ideas. He's also a software developer, so he's got that going for him. That's why we're good friends. But before we get started, if you're watching the live stream, please make sure to like and share and comment and ask your questions. Send in your super chats. And tonight's episode is brought to you by the Nugg of Knowledge, indoor-grown, chemical-free, smokable hemp, flower, and Delta-8 vape cartridges, legal in all 50 states. Get elevated at nuggofknowledge.com. And, of course, help the show out. Head over to taxationistheft.info and buy a hat, buy a flag, buy a T-shirt, all kinds of cool stuff over there. And now onto the show. Alex, welcome.
How you doing, Dan? And thanks for having me. It's nice to talk again. It's been a while.
Yeah, it has been. I guess I want to say like, well, you haven't been that active in the party lately, but it's like the party hasn't been that active lately. I mean, there hasn't been a lot going on, especially because of COVID. Not a whole lot of conventions and that sort of thing. But yeah, it has been a while. I want to start off by asking you, which tax do you hate the most?
Probably more than likely the income tax. Trying to think if there's any other tax I hate just as much. That's why one of the reasons why I hopefully will be moving to Florida soon. So I won't have to deal with that one anymore, at least at some level. There's so many.
Yeah, you're double income taxed over there.
Oh, yeah, it's the worst. New York City, you're getting hit. City, state, local. I think it's like the highest tax jurisdiction all over. Yeah, so I'm getting pummeled from all sides.
I forgot about that. New York City has like its own city income tax. That's nuts.
Yeah. And then like I don't like I work remotely now, so it's like there's no reason for me to be here. So
right,
we're going to Orlando as soon as we can.
Just give your job a PO box in Texas or Nevada or Florida, and I mean, just tell them you're VPN in.
Fair enough.
I mean, really, what's the difference? Yeah, it's funny like how that works, right? Because like, what's their excuse for taxing your income? Like, are you because you're using the roads or something? But like, you're paying the gas tax, so that doesn't make any sense. It's all bullshit.
Mm-hmm. Yeah, bullshit. It's like so much of it gets wasted on imprisoning people, and then at the federal level, you're talking about people who die for some of these rules, people whose livelihoods are crushed because of some of these rules, and it's all out of our dollars.
Yeah, it is insane. Yeah, and for all those people who love paying your income tax, if you're listening, just so you know, you have blood on your hands because you voluntarily give them money so they can go drop bombs on people. Whereas I only give them money when they put a gun in my face. And even then I try not to. I tell them, oh, sorry, I don't have my wallet on me. Keep my cash in my sock.
Yeah, and I'm hopeful that we can get to a world where there can definitely be little to no taxation. And this is where like I take like the approach of like encouraging people to be like nicer and kinder to each other. Because a lot of times when you think about like why do people have this impulse to like government do X, government do Y, it's oftentimes because of how the fear of uncertainty we have towards each other. It's kind of like we think that this other person is going to do something to us, so we need the government to stop them before they do something to us. So if we all trusted each other more, liked each other more, got along, we're kinder to each other, eventually we can just kind of stop asking there to be this sort of violent monopoly that interferes, because we can just be a community. So that's just generally like
right. Mom. We can be the adults, right? We don't need to. I mean, that's basically what it is, right? Like when your kid's on the playground and like someone gets in a fight, you call the adults over and they're supposed to break it up. And that's, as adults, that's kind of what we ask the government to do. But it's like, if we can break our own fights up, we don't need them for that.
Exactly. If we learn, and that's like things like communication, emotional intelligence, if we just choose to be better, we will get a better world, and there'll be less violence, more consent, all that good stuff. So it's just all about just, you know, getting people to be better, and then the government will go away.
Yes, I like that. I like that part. It's a story with a happy ending.
I like happy endings.
Yeah. So let's talk about like what you do or what you did. You train Wall Street traders.
Mm-hmm. Yep.
What's that like? What's that about?
I did it for 2008 to 2019. So basically what I do is that, and this comes back down to government regulations, because of several different regulations at different level. To participate in the financial industry, you need several different licenses. So like entry level, you're talking about like Series 7, 63. If you're like a higher level, senior, could be CEO, could just be a managing director at some level, you might need a Series 24. If you're an investment banker, you need 79, trader 57. So I would actually train people for all these different exams, which oftentimes required me to kind of just teach like foundational financial concepts, whether it's like teaching about different products like futures and options, teaching economics, talking about monetary and fiscal policy, and lots of different topics. We'd also do like practice planning, where we'd sit down with like financial planners and teach them how to build their business, but how to, you know, build a business that attracts customers and attracts referrals. So I learned a lot in that space, and it was cool because I got to have a very kind of sort of educational influence on a lot of people in finance, and it got to inject a lot of sort of libertarian thinking and libertarian perspectives on a lot of these products and ideas and whatnot for over a decade. And it was pretty awesome because, especially at the entry level, a lot of these people who were getting their licenses were either like college graduates, sometimes high school dropouts. They're all like, you know, young people with sort of forming those ideas. So it was nice to kind of be able to be in that spot to influence them.
Right. So did you, I mean, is this like all kind of like classroom based stuff, or like do you?
A little bit of all of the above. So basically we had classes, so you'd be able to sign up for like regularly scheduled classes, and I would sit there with a whiteboard and 4 colored pens. Sometimes I'd actually get hired, so I got to travel the world a little bit to like places like Amsterdam, Canada, to do classes there, or to do one-on-one trainings there. We'd also do special programs, and this company was Greco Financial Training. They're still around. They still do classes. They're still doing training programs. I just now have switched careers, but they would also do this program where we like take you around Wall Street. We take you to the New York Stock Exchange, over to the NASDAQ, see the opening and closing bells, stuff like that. And this was where we like showed people like how to build up their practice. So part of that was building up a level of authenticity. Like basically you want to walk into with a client and walk in with a sense of authority that you are who you say you are, this solid financial planner who's going to improve their lives. And part of that is also making yourself confident. And oftentimes it's wearing the uniform. So like having the photos of you at the New York Stock Exchange with different like people, and being able to decorate your office with these things would help, one, make you more confident, but also help broadcast that message. I mean, it's like why once I heard that I was going to be vice chair of the Libertarian Party, I went and bought my own gavel and a copy of Robert's Rules. It helped me feel like I was playing the part and a little bit more confident in the role.
Awesome. Yeah, so that's really cool. And so I'm kind of an amateur stock trader. And I know everybody's really excited about what's been going on with GME and some other stuff. And I think let's talk about that. Let's talk about some of the crypto stuff too. But I guess let me ask this. Well, first, let me ask, what's your take on GME and like GameStop, and like what's the like, how did this unfold? What's the backstory here in your view?
From my understanding is you have a group on Reddit that talks about trades. This kind of started some momentum to start buying GameStop stock, and not just because they wanted to push up the stock, but apparently there are some legit reasons why they were bullish on GameStop in the long run. That caused a price to increase. Now, what happens is a lot of people who hold short positions. A short position is when you sell somebody else's stock with the promise to return that stock at some point in the future. The hope is that you get to buy back the stock that you borrowed at a lower price. So you're betting that the price will go down. But if the price starts going up, you don't want to lose too much money, so you get out of those shorts. But then that means you buy the stock back. That pushes the price up even further. That means more people who are short jump out. And this is what's called a short squeeze, where you have this sort of cascade of short sellers buying back into the market, causing GameStop to increase pretty quickly. I mean, you see this in stocks all the time. It's not anything that's out of the ordinary or there's nothing wrong with it. I think it was just such a big move up. It was such momentum because it moved up so quickly. Then you had other investors saying, "Oh wow, GameStop moved up quickly, so I should go buy some GameStop too." And you have this just kind of self-fulfilling momentum, which is fine. Like a lot of people are like, "Oh well, we needed like to put rules on this kind of thing, and we need to go punish." And oftentimes that's just coming down because some hedge fund lost some money, because you know they thought shorting GameStop was like a sure thing, and they lost a lot of money, and now they need to tell the politicians in their pocket that someone needs to pay. But at the end of the day, you want short sellers, but you also want speculators. They hold each other accountable. Anytime speculators run out, like every time short sellers short sell a stock too low, then you see the speculators saying we need more rules on short selling. And whenever the speculators have a price that goes up too high and the short sellers lose the money, they say, oh, we got to put rules on speculators, but they hold each other accountable. If a price gets too high, it's the short sellers who say, hey, you're doing something ridiculous, we're going to short sell that stock. If a price gets too low, then it's the speculators who say, hey, that price is too low, we're going to hold you accountable. That you need that in the market. So when people sit there and say, hey, we need to make rules on this kind of thing, they want to hurt market prices. And market prices allow that market activity, that force, that force between short and long, that battle is what allows there to be actually a fair market price over the long run. Yes, there'll be blips where the prices get weird, but when you have sort of hard to value assets like securities and whatnot, a market one provides the liquidity, provides the fair value, so that way companies can continue to raise money, so that way people can invest and build their wealth. And messing with that has huge ramifications. So I'm always very, very disturbed when I hear people talk about like regulating short selling and long selling. I'm not saying that the industry itself shouldn't always try to practice best practices, but it already does. I work for financial companies, training them on the rules that they already follow, which are a ridiculous amount. And and most businesses would still follow. Some rules would just exist in place because generally every business needs insurance, and every insurance company puts rules on their policyholders because, hey, I want to manage the risk that I have. So a lot of these rules, as far as like keeping track of records and stuff like that, would probably still be in place. It would just be, technically that's what happens now. It's usually exchanges who require a lot of these things because exchanges have a lot of financial liability on their participants. Like they guarantee all the trades. So if the traders don't, take care of themselves, they can put the exchange at risk. So the exchange puts rules on them, which that's sensible. I'd rather have them do it than the government do it, because you can go to another exchange if you don't like it. But now with the rules that they have, they've kind of made it all like one big giant exchange, and all the rules are very homogenized because of a lot of top-down stuff. So you don't really have that competitive market for rules like you once did. So that was like a lot of points in one, but the bottom line is like I just don't like it when people try to centrally manage rules, because you want to, in the same way I want a market for cell phones, so that way they can be improving cell phones and improving prices. I want there to be a market for rules, so that way there can be better rules over time.
Right. I think that's interesting because, like, there's, so I mean, I always look at stocks as gambling. And I grew up in LA, and we had some little casinos around LA. Like, I don't know if they were technically Indian territory or whatever. There was a Hustler casino that was owned by Hustler. There were a couple other ones. There was one in Bell Gardens, but then there was Vegas, right? But you had to drive a few hours to get there. But the rules were always dramatically different, and I think that's kind of analogous to what you're talking about, because like if you don't like the rules in one casino, and of course all the ones in California were the same because they're under California's rules. But you could say, okay, well, screw this, I'm going to go to Vegas and play under different rules. And even in Vegas, a lot of hotels had different, you play blackjack. There's like single deck blackjack, and then there's like the 10 deck blackjack or whatever they do. And so, you kind of get to manage your own risk, knowing what the rules are going differently. But, to that same point, to the feds to regulate these markets in that same way, homogeneously across all of them, is kind of like if the federal government came along and said, okay, all the casinos in LA, all the casinos in Vegas, there's only one version of blackjack, and that's all you can play. It would totally kill it. I mean, that's the thing. Different people enjoy playing the game in a different way, and I think that's really kind of an interesting way to do it. Now, of course, there is sort of I don't want to call it a monopoly, but there is kind of like you don't have one stock that can be listed in multiple exchanges, right? It's so like
once upon a time, you could, like, technically, it's kind of like how cryptocurrency is now, where like just because the same cryptocurrency is listed in two different exchanges, it might have two different prices that are slightly different. That used to be the case with stocks. Then in, I think, 2007, they had a rule called Regulation NMS that forced all the exchanges to kind of connect to each other. So technically, any stock could be traded on any stock exchange. It constantly is. But basically, there's just one overarching system that's constantly checking all the orders everywhere and routing orders to the best price. So imagine like if every crypto exchange by force had to connect to this sort of centralized system, and orders always got routed to wherever the best price was. Now that might sound like good at first because you're thinking, oh wow, I have access to the entire liquidity of the entire market. But what happens over time is certain exchanges just won't be able to afford, because not much order flow is going to go their way. So you'll have less competition, which means the exchanges that survive are going to have more sort of market power, which also means more political power. You also end up having to carve exclusions, because there's just certain business that just can't work in that realm. So for example, sometimes you have like really large orders that you don't just want to like just toss in to some algorithm to allocate, because you're gonna, like, if I were to put in an order for like $1 million worth of Dogecoin, I'm gonna end up paying a lot more for that Dogecoin per unit than I really would want to. So I would want to
because every order to buy, it's going to drive the price up.
Yeah, so I would want to break up that order over time. So basically, they have to carve out exceptions for stuff like that. And then also there's other types of activity, so that you have, what happens is that you say, okay, well, if this exchange has such little business that they're below a certain threshold, they don't have to follow these rules. So then what happens? Everyone creates a bunch of mini exchanges. So instead of running one big exchange, you run 10 mini exchanges where they each are under that threshold. And that is where, like, what they refer to as like dark pools. So they avoid all the rules, but they're all like, you create this really sort of opaque market versus what was before, not perfect, but it was more transparent than it is now. Because people, in trying to avoid the rules,
well, and that sounds kind of like so Robinhood, I don't know if you're familiar with this part. Robinhood at some point started taking buy orders for GameStop, and I'm like somewhere between GameStonk and GameStop and everything else. They stopped taking orders, and then later on they blamed it on their I guess the exchange that they put their orders through charging too much per order or something like that. But it sounds like this kind of has something to do with that system you're talking about. I'm not too clear on it, but do you think that's related, or
possibly? Like what usually happens is that, let's say I'm like Robinhood, usually have like a trading system set up, so it's like bifurcated. If the customer puts in like a market order, what you do, it just kind of goes out to, like, you have a connection to the exchanges, and then you have a connection to like off-market dealers called market makers, and they'll generally have a price that's around where the exchanges are at. So if it's a market order and they're just willing to take whatever price the market has, it's going to go to the market makers, because the market makers often offer a rebate. So basically, not only are you getting the commission on the trade, which Robinhood's not getting any commissions, but they'll receive this rebate called payment for order flow. You're going to get the same price either way. So if I'm going to give the customer the same price either way, I'd rather give it to the person who's going to pay me a little money on the back end for that trade. And then if you put in like a limit order where you want a specific price, that probably gets directed to some exchange and sits on that exchange's order book. So you have like this system there. Well, probably, I'm assuming what happened is that, like, when volatility increases, market makers are going to want to make, they have to make money to offset that risk. So they're going to be like, I'm not comfortable. I want to buy at this lower price because I'm not comfortable buying at a higher price. And I need to sell at this price because I need to make sure I make enough money to offset any losses I have along the volatility. So the spreads widen. That could end up causing an increase in costs to Robinhood. At the end of the day, I would have assumed like we're getting so many orders that even also their system just wasn't able to handle the order flow that was coming in during that time. Because I know I was trying to get in orders and they were like failing and not going through some of them. But I mean, they are a company. They can decide, if they want to restrict orders on a particular stock, they can do so, long as that agreement they have with customers outlines that. If they did it and that wasn't in that terms of agreement, then you have a problem. But I mean, it's based. That's when you sign on that terms of service, you did an agreement, and if you don't like those rules, there's plenty of other broker dealers out there, and there are actually others who do free trades like Robinhood now. So
that almost looks like it's the norm at this point.
It's getting there.
I was looking at E-Trade is doing free trades now. Interactive Brokers, Ameritrade. Unless like you start getting into like options and some of this other stuff, it looks like most of the regular trades are free. So that's really interesting to see. So you mentioned something about this before, and I kind of want to bring this up because I've always said that a lot of people look at a stock as like, okay, the stock should be valued at what the company is valued at. That's kind of the perception that people have. But you also talked about how, the market changes the price of that. And so it's almost more like they're not really directly related at all. When you're if the company is worth $1 billion and you buy one share out of $1 billion, you're not buying like $1 that's going into the company, right? You're finding somebody else who has something that you want, and you're trading it at whatever price you can. And the companies themselves, it happens, but most of the transactions going through the market are not the company buying and selling their own stock. You're not buying and selling from that company. You're buying and selling from other traders. So what do you think about like the correlation between like the market price and the valuation of the company? Is that how do you see that? Like, how do you see that relationship?
I think the current valuation of the company is a factor, but it shouldn't be like in the sense that, it shouldn't be the sole reason you buy the price of a stock is what it is. Because let's pretend we're buying shares in like, let's say just in people's incomes, just theoretically. So if I'm buying a share like of a high schooler's income, he's only making so much money right now, but the future potential of that high schooler is going to be a lot more. So that price should reflect the future potential of that child's income. So it's the same thing with a stock. So the stock company may only be making X dollars right now and worth X dollars on paper, but what you're really buying is you're buying a sentiment on the future value of that company. So the market price is a reflection of where people think the company will be, that will at a price that they think they will still kind of walk away with a return on. And what that does is that if the company's stock represents like the actual the perceived sort of future value of the company, it also means people who want to just like take over the company, they have to pay a price. Like if you didn't have like a market and people had to pay just like what's the paper value of the company, you would have hostile takeovers all the time. People with a lot of money would be able to buy like the companies at a much lower price than they probably actually are going to be worth, and be able to just take over the company. So the market price allows there to have a publicly owned company where you have the shares publicly traded, but allows there to be a sort of a stable sort of management of the company. You don't have like schizophrenic management of the company because it's changing every quarter because somebody else bought it. So
right.
It serves a purpose, and vice versa. If someone's doing a really bad job and people perceive that the company is going to do more in the future, the stock might be trading for a lot less than it's worth, and that's going to open up the door for someone else to buy in and take over. So it serves as this mechanism to actually even like help steward better management sooner than later. And then also a mechanism for the company to raise more money in the future. So if the company is perceived to be able to be more valuable, the company can issue more stock and raise money to take advantage to reach that potential sooner. Like there's a lot of benefits to the price that aren't obvious, and nor should it be obvious to the average person. You're buying a stock because you want to make money, and that's all that should matter to the individual person buying a stock. That hey, did my investment give a return? But by virtue of that sort of self-interest, you end up creating this mechanism that actually improves governance, corporate governance overall. In most cases, and it's not perfect. Nothing's perfect. There are going to be situations where it actually has the opposite effect. But if something's bad 1 out of every 10 times, I'm not going to suddenly want to shift the rules and shift the control and centralize it to make it bad 9 out of 10 times. So, I don't want the perfect to be the enemy of the good.
Right. And this is one of the things they said about AMC, which was another one of these stocks that was closely related to what was going on Reddit, was that when AMC's stock went up, the company was on the verge of bankruptcy, and now they say they're saved. And I would imagine what happened was they saw the price go up, and they're like, "Hey, let's take advantage of this." They sold some of their own shares into the market to raise the money so that they could stay afloat for however much longer. So I can see where where a company that still owns its own shares could take advantage of that. But what happens when you have a large firm that's shorting a stock and making the price go down? If what they say about GameStop, I had to think about it to make sure I said that right this time. What they said about GameStop was that the hedge funds were shorting it, which was going to force it out of business. But at the same time, they have their own assets, right? They have their own income. They have their stores. They have their online channels, whatever else they have, and they have their income. They have their bank accounts with their cash, and they're paying for advertising and all these other things. Ultimately, even if they were holding on to their own stock and the value of that went down, if they weren't intending or expecting to sell that to stay afloat, is it possible to put them out of business just by making their stock go down?
It depends what their other financial dealings are. That basically the equity they had in the company could have been the collateral for a loan they might have had. And generally, like loans you might have covenants that the collateral has to be worth so much versus the loan. So if the collateral dropped in value below a certain amount, they might have to put up additional collateral to the point where it would be the company becomes financially infeasible. That's actually kind of what happened with like a lot of this the credit default swaps with the housing crisis. Because what happened is that was it AAG? It's been a while. AIG. What happened is that they were writing these credit default swaps, which are like an insurance policy on a debt instrument. So, and the way they were written was that AIG would be required to put up more collateral if the underlying like assets dropped below a certain amount of value. And that's what ended up taking out AIG. It wasn't that these contracts actually ever like were cashed in per se, or at least not yet. What happened was the housing market started to deteriorate. This triggered a bunch of collateral calls on AIG, and AIG had to keep locking away more and more money as collateral, and that eventually made them sort of financially collapse. And then that triggered all sorts of fear, which triggered a lot of those securities to go down a lot in value versus, and probably less than they would have been relative to the actual amount of houses that foreclosed per se. So like after everything is said and done, like the amount of people who actually ended up paying their mortgages and whatnot was probably, if you bought those securities at the bottom, you probably ended up making a little bit of money if you bought a lot of those distressed securities. But yeah, it's like a lot of these like weird clauses in these contracts.
Right. And I see this on I think it is. So if let's say you have like a regular margin account, you're investing in stock and you have a margin account and you borrow money to buy a stock, it's possible that at any moment that stock can drop to like a value of 0. And if you've borrowed so they leverage your, so let's say you put in $5,000 and then you borrow another $5,000 and you buy $10,000 worth of this asset. If that asset drops in half, 50%, it's now your $10,000 investment is now worth $5,000, but the broker has lent you that $5,000. So at that point, they're like, hey, if this goes down any further, we might not be able to get our money back. So at that point, and this is basically the terms and conditions of using the exchanges, or of borrowing the money, is that they're able to sell your stock for you if it drops below a certain rate. And so I could see like that's kind of what you're talking about, where if they borrowed money based on the value of anything really, and if that looks like it's deteriorating, then they could say, well, hey, we want you to call in the loan, pay it off right now, because your collateral is worthless.
So I imagine if that was the case, that's one possible mechanism for that causing GameStop to go out of business. I'm not familiar with GameStop's balance sheet, so I don't know what liabilities they do have, if they have any outstanding bond issues, if they have any collateral provisions. But theoretically, that would be sort of one mechanism where that could happen. Depends on what contractual obligations they have. Right.
So let's talk about crypto. How well do you know crypto in general?
I used to know it a lot better than I do nowadays. I'm still pretty active in it. I just haven't followed a lot of the newer like layer 2 stuff as much as I have. And but I have enough that I can have a good conversation about it.
All right, because I know there's so many different aspects to it, right? I mean, there's like trading, there's people are day trading on this. There's the aspect of people using this as a currency versus some people. I mean, that was the original intent, right? This was going to be the perfect currency that everybody could use, immediate transactions all around the world, unstoppable by governments. But now it's like a lot of people are. They're not buying it so that they can use it as a currency. They're buying it because they want it to go to the moon. They want the gains. They want the long term, and it seems like it's just going up and up and up. And what's interesting is as a market as a whole, when you're buying anything, if you're buying the stock or if you're buying the crypto, you're selling the dollar. Mm-hmm. And so, I mean, I think, part of the original purpose was to replace my tongue stopped working. Replace fiat currency with crypto. And it's almost kind of doing that, but not necessarily in the way that it was intended, which I think is kind of interesting. What do you think about how that's working out?
I agree in the sense that, like, I don't think the creators would have ever anticipated how disruptive the technology this has become. So just on the currency side first, yes, it's not necessarily creating like actually, in a way, I think it's kind of actually helped the dollar survive longer than it probably would have otherwise, because we've printed the deficits have been huge, especially in the last year, and it's going to probably be huge again this year, trillions of dollars. That would normally put downward pressure on the dollar, but a lot of that money is kind of going into there's a couple things that are preventing, at least in my opinion. I would definitely think there's definitely going to be people who can disagree with me on this next statement. But I do feel like there's a couple sort of things that are different about today's context that prevent a lot of sort of the more drastic inflation you would expect to see. And when I say inflation, I am speaking specifically about price level increases, because I know sometimes you're talking about like inflation as an increase in the money supply versus an increase in the price level. But the reason we're not seeing the price level quite shoot up the way you would expect is a couple different reasons. One is we have this whole world of currencies that a lot of that money is kind of going into that kind of expense. So you think, so it's creating inflation there. So we're seeing like the prices of like a variety of cryptos, not just like sort of the most sort of practical ones, but like a lot all across the board. So that's one place we're starting to see some of this money go into, which makes sense because it's financial institutions who generally receive sort of the new money first. So they're making financial investments with it. Two, also, when we think about the consumer side of things, like our spending is a lot different than it was before. I'm not buying as much physical stuff anymore. So if I'm like playing Angry Birds and I need to buy an extra life on Angry Birds, like I spend $1, but there isn't necessarily less stuff in the world. It's not like if I bought a sandwich, there's less bread, there's less, there's the lot, our consumption of digital goods has really kind of changed, like how quickly we went through. Like there's electricity, but the electricity is already being used. Go for it.
Right. Well, I was going to say that's interesting because like right before you said a sandwich and then you eat the sandwich and it's gone, I was actually thinking like, the like keychains and, cheap little plastic things, like whatever, just junk that you buy. And like, it's like, yeah, there's more stuff, but it's like, it really doesn't improve your life that much. And it all ends up in a landfill. But if you're buying an extra life on Angry Birds, it doesn't end up in a landfill.
It does. Yeah, no, it's great for the environment. But I mean, at the same time, also like it's not going to have the same impact on prices that necessarily buying physical goods are, because it takes a lot more work to replace bread and some roast beef than it does to replace.
No scarcity with that. There's like
a little bit,
but not unlimited supply of extra lives that you could buy.
Yeah. So there's an unlimited supply of extra lives. Theoretically, if I bought enough extra lives and enough people playing Angry Birds, AWS data centers might hit capacity. But the thing is that like that would be a lot, and they would make so much money in the process. Like it'd be easy for them to expand. Like, so this digital good thing is like really kind of changing the dynamic of sort of like burning resources with extra money. Because once upon a time, before the internet, before all this stuff, if you put in $2 trillion in the economy, we would be buying cars, shoes, all these things that are not quite as easy to replace. So you would certainly have like a real rush, an increase in price on a lot of these physical resources to build these things. I mean, you probably have some increase in prices in things like silicone and whatnot to build these data centers. But again, if I spend $1,000 on Angry Birds, like it's going to make no dent in that. And then on top of it, also with wages, people are like, okay, we're at like full employment. And even before like the pandemic, we were like at full employment, and we're not seeing like wage inflation. Well, because people are looking at it the wrong way. Back in the day, what would happen is that you'd hire from the local town. So suddenly, like, if everyone in the town was hired, basically, and you're like Wendy's, you're gonna have to go pay a little bit more to go poach somebody, the high school kid from the local McDonald's. But most jobs aren't like restaurants anymore. Actually, most of those are the jobs that are still around right now. Nowadays, you can hire people from anywhere. So in that case, like, even if everyone in the U.S. is let's say theoretically hired, you have like full employment. I can just hire someone from somewhere else because they're working remotely. So you theoretically, like, the number you really want to look at is like the global unemployment rate to see if we're in today's sort of like digital labor market. So the digital revolution has changed some of the economic. It hasn't changed the rules. Like, more money will cause inflation, but the pool you're playing in to measure these trends and see where these trends are going have grown exponentially, because you're playing in a global market for labor with sort of this infinite, not, I wouldn't say infinite, but near infinite increase in the supply of consumable goods through digital goods, whether it's watching a movie on Netflix or whatever. And that's become more and more of our consumption. So that changes the dynamic. So my grander point was like things like that and things like crypto have actually really kind of been able to absorb a lot of excess liquidity in fiat currencies, but at the same time, they've provided competition that does put pressure on the dollar to like notice how like the US hasn't necessarily super clamped down on crypto, because they realize, okay, we can't really stop it. It's just impossible. It's decentralized. It's peer-to-peer. Like everything you would want, a technology that subverts government authority. It's there. It's beautiful. So to them, it's better to play the role of facilitator than to be an antagonist. Except for the New York government, because New York is New York. That's another reason I can't wait to get out of New York.
Well, I saw one of my friends from I think it was Nigeria, posted like an executive order that they're banning all of the crypto exchanges now. So
in Nigeria,
So they're trying to, and it was like a letter that they sent to all the banks saying, hey, if you know somebody is transferring money through your bank for the purpose of exchanging it for cryptocurrency, you need to stop the transfer and you need to report them to the police.
That's really unfortunate.
It is.
Yeah, because Africa is one of the places where like cryptocurrency has really been the most valuable, a very valuable technology, with things like BitPesa that have really like allow like remittances of cryptocurrency. It really basically allows economies to kind of, like, one of the issues with countries being able to catch up with, like, let's say the US economically, was building out financial infrastructure. But with cryptocurrency, you can have payments without having to build out all that infrastructure. You can have banking systems without having all that infrastructure. So countries that didn't necessarily have that infrastructure could literally leapfrog economically because of it. Like, it's so like that makes me sad.
I'm working with people in Uganda we set up this Harambee, the African Art Exchange, which we're working on exporting art from Uganda to the United States and importing money. And it's difficult, especially what's going on over there with, they're shutting down the internet with, whenever I talk to my guys out there, they have to be on VPN and everything else. So they are definitely trying to control it. And it's just, I mean, it's interesting. It's scary, but at the same time, if they were able to function with Bitcoin, then, any money I wanted to send to them, I wouldn't have to go through banks, which right now we're using Zoom, and they had routine maintenance today. So the money's just not going through. And it's like, well, that wouldn't happen with crypto. And then if what they need to do is, one of my guys out there was trying to buy machinery from India. So it's not like the money's going to stay there. He's going to forward that to India so that they can import machinery. So, it really connects them to this international market. And because that's not available, it makes that tremendously more difficult. They have to go through banks. They're going to be taxed on, the money coming in, the money going out. And Uganda's, I mean, they've got 100% import fees on all kinds of stuff. It's nightmarish. And then of course you have the government is trying to shut down social media and everything else, which is nuts on top of it. But yeah, crypto is like it really is a symbol of economic freedom. But I want to go back a little bit to to what you were saying about they're printing all this money and it's inflation. And I don't know if this is the right word, but this is what I've been calling it. And I have to say this because I'm humbled by your presence, because I'm sure you know so many more words than I do in the financial world. I call it market inflation, where a specific market is inflated when currency is introduced. And so you have 2008 was a perfect example of that, when they said, oh, let's just lend a shit ton of money to people who can't afford loans so that they can buy houses. And the price of houses went up. The price of bread didn't really. Like, the price of nothing else really went up. And we see the same thing with education, right? You look at the cost of college over the years, and it goes up and up and up faster than everything else, because they're creating loans that banks normally wouldn't lend money for, because people really aren't interested in borrowing that much money for it. But the government comes along and says, hey, we'll make it really easy for you to get into a shit ton of debt, and we'll back up the banks so that they feel comfortable lending it to you, and they inflate those specific markets. But what's interesting also, like, because that maybe that is happening, and that's why some of the crypto is going up so fast right now. But what's interesting is, you talked about people buying non-consumable goods or virtual goods or these other things. But what's interesting is, like, crypto, people are buying crypto, but it's almost more like savings. Like, it's
Correct.
almost like people are investing, like, they're saving now more than they've ever been able to before, because of all the taxes. And, the government comes and takes everything. And I mean, I know that stuff is still all there, but especially with, like, people are taking their bailout money and they're buying crypto with it. I think that's really amazing. It's like the inflation is now happening in people's savings accounts.
Yes, no, this is it's and then yeah, and it makes sense, because while people are getting like their stimulus checks, people are like, a lot of people are so worried about tomorrow, then they're not necessarily spending the money on stuff. They want to invest it, because they don't know when they'll be able to have a job again if you're in the restaurant industry. So it's like, so people are looking for avenues to invest it. And when you take a look at, hey, people see the upside. Oftentimes I wish people understood both the upside and downside better for all investments. But yeah, no, people are putting their money in crypto because, hey, this is a place where there's still a lot of room to grow. It's still new technology, and the adoption, isn't necessarily ubiquitous yet, to the point where there is obviously a lot of upside. And I mean, we see the price of Bitcoin going up now. Well, I miss definitely going to like Libertarian State conventions, because they're the place where I can definitely always spend crypto. So like all that crypto I have hoarded always is like, yeah, I can buy a t-shirt. Let me buy this state's t-shirt.
Right.
But the thing is that, like, what happens is, let me just retrace my footsteps there. I drew a blank. Go for it.
I hate it when that happens. So this is an interesting concept to me too, right? So today or yesterday, I think it was today, Elon Musk or Tesla bought like $1 billion worth of Bitcoin, or $1.5 billion worth of Bitcoin. And the price went up from, like, I think it had dropped below 30,000. So it was like 27,000, and now it's at 37,000. Am I saying that right?
What Bitcoin?
Yeah. It went up like $10,000 today.
Yeah. Like last I checked, it was like 44, I think. But I mean, that was like, it could change like every minute. Like,
it was like, I think I checked it like right before the show, and it was like 47. Right now it's 46,700. It's insane. But, and this is after, like, he spent that investment. So, like, one, it creates a buzz where people are like, oh my God, wow, if he's into it, I better get me some. And of course, we're talking about a market now. So if nobody wants to sell theirs for anything less than 50,000, hey, sorry, that's what you're going to buy it at. But what's interesting is, like, the value of the crypto itself doesn't really change, because Elon came along and said, here's $1 billion, but he didn't put it into crypto. Like, it's not like It's not like there's a Bitcoin somewhere that just got bigger.
Yeah.
It's he put that money in and somebody took that money out. And I think it's really fascinating when you look at it like that way, because it's like, yeah, he put that money in, but somebody took the money out. So it's like the market itself still is worth what it was before, but now it has increased. I mean, essentially all it's increased is what people are willing to pay for it. But I find it fascinating. I don't know. It's almost like maybe it's the relationship of the market cap, which is, to anybody who doesn't know, it's the, it's when it's stock, it's the number of shares times the current market price, or with Bitcoin, it would be the number of coins times the market price. That total valuation changes, even though most of those coins weren't in the transaction that inflated the price. I think that's really fascinating, but that kind of goes to show you what power the market has, and how the value of something in a market is worth I mean, I was going to say worth so much more than what it represents, but at the same time, it could also be worth so much less than what it represents. I think that's really, really fascinating.
Yeah, it's at the end of the day, it's all really the value of everything is all about perception. It's all about what we believe. What we believe is reality, in the sense that, like, this most of the time, I think it's a great thing. Again, when you're talking about government power, it gets scary, because when government believes X persons are bad people, then it turns into wars. But at the end of the day, like, our beliefs can manifest reality. But when it comes to crypto, like, on top of it, like, other cool things about it is that even if people, let's say, like, people are using Bitcoin as a currency to some level. Again, if I go back to BitPesa, who uses Bitcoin a lot for, like, for doing, like, currency remittances in African countries. But also people are building other technologies. Like, I was learning about this thing called Blockstack the other day, which is actually a protocol built on top of Bitcoin for building different web applications on. So instead of building a whole separate blockchain, they just built it on top of they use the Bitcoin blockchain. So they're using Bitcoin as like a big processor, like a giant computer, to process the transactions that go on in their sort of like second additional layer of stuff, which that's really cool. I mean, and that is valuable. Like, now with, like, Blockstack, if you have a Blockstack account, it's on this blockchain, and all your content across any application built using Blockstack is just available to you through your unique kind of identifier. So the idea is, like, now, because before we always think like every blockchain had to have all the features, and it was all the features in that blockchain. But now we're starting to see more and more where people are building these other additional layers of technology around different blockchains and giving them other features that are not necessarily built into that core thing, but is extended because that creates more demand for that currency as people build applications on top of these things. So it's pretty fascinating. Now, but then people realize, hey, if people want to spend that as money, you need something a little bit more stable. So you're starting to see, like, the proliferation of, like, stable coins pegged to all sorts of different ththings, but things that just kind of have a stable value, so you can feel comfortable spending it, because it's not going to be, if you're spending like USDT or USDC, like, it's going to be worth $1 tomorrow. So I'm okay sending someone like $10. I'm not worried about it. So you're starting to see all sorts of different needs like being fulfilled, which is awesome. I love markets.
Right. Yeah. No, it's when you said, like, I'm okay with sending someone $10, I was just thinking, so I use Exodus as my wallet. And what's interesting about this is, like, it'll show you your past transactions, and it'll tell you what they were worth in dollars at the time that you made them and what they were worth now. And it's funny because, like, I was looking at one of them, and it's like, wow, I gave somebody like $5 a year ago, and if I didn't do that, I'd have $100 right now. It's it's really terrible. You shouldn't look at that. But it is really interesting. But so I want to talk about Dogecoin, because I just found this out today. So Dogecoin is like, okay, so it was created as a joke, right? It's named after a meme, and, like, I mean, that's it. It's kind of worthless. It's like, I bought the other day, I bought 2,000 of them for like $25. And of course, everybody's trying to do the game stonk thing on it and buy it and shove the price up, right? So my I think it was $50 or $25. It's worth like 180 right now. But what I found out this morning is there is, I don't know how this works. There's an unlimited supply, whereas with Bitcoin, there's like a finite number. As people mine, it eventually is going to get to a point where there's none left. but I guess Doge is
Mhm.
just infinite. But I mean, I guess maybe it's at least rate limited.
Mhm.
But to me, this is so much funnier because it's like now people are pouring money into this. The price is going up because of the market, but at the same time, if there's absolutely no scarcity to it, it doesn't make any sense at all.
It could theoretically, because it depends on the actual protocol. But yeah, no, I mean theoretically, what a blockchain does could just is based on whatever software all the initial miners agree upon. Once it's out of the bag, it's really hard to change. But yeah, I mean I don't know exactly what the protocol is. If they have like if it's just like, hey, we're just going to issue more and more just gets created anytime, whenever, then yeah, it's kind of hard for that to really have a long-term value. If it grows at like a set rate, like let's say like it increases by like 3% a year, theoretically, if enough people are using it, the amount of people using it could exceed sort of the rate of its growth, or the growth in demand exceeds the rate of expansion of the supply. You could maintain a growing value, but yeah, no, in the sense that like when you have something like Bitcoin, the scarcity is much more tangible, which makes us why like Bitcoin has ended up functioning more like gold, whereas like it's a store of value because it does have that sort of finite supply. Like, and so you're starting to see what I think it's what Gresham's law work in the place, where like bad money chases out good money. So when you have like two currencies and one currency is going to maintain its value more, I don't spend that one versus the one that's so like I wouldn't be surprised to see a world where like suddenly everyone does start buying a bunch of Doge. Doge goes up to even if it's like where it is now, but everyone starts buying enough Dogecoin where they actually start spending it. You know, that becomes sort of like the more. But I think now with stable coins, that becomes more sort of like the solid choice for your spendable crypto. And then like Ethereum, Litecoin, Bitcoin, they'll be like stores of value / protocols for building like other applications on top of. I mean, I'm still really excited about the whole idea of decentralized applications, like because that really changes the game.
Right.
Because I mean, you have two concerns that are always that when you talk about like the right and the left, you always have like, you know, I mean, you don't have to be right to be free market, but theoretically, that's kind of like how people associate it. So you have like people who are like, you know, the benefits of markets, but then you have people who are worried about like inequality and the distribution of wealth. But decentralized applications, like if that becomes sort of like, which I do think will happen over time, become the way enterprise happens, that solves all goods. Because like, for example, there was this one thing on Ethereum called like I don't know if they're still around, but they're called called B token, and they were trying to build like an Airbnb on the blockchain. So basically, what happened is that like the application just exists in the blockchain. So they don't once you build the application, you don't run it. There's no one who can shut it off. It just exists. There's no central business. Basically, they make money is if the token becomes popular and the token rises in value, they make money on building this app. But at the same time, what happens is that you have people who want to put their houses up for renting, and they benefit because they get paid in B token. Other people become dealers in B token, and they make money. So basically, you create this division, this sort of decentralized division of labor, where everyone gets the profit off the enterprise, and the profits of the enterprise get more distributed because of that decentralization. And that addresses both sides. You have free markets, but you're also going to have a greater, you know, sort of distribution of the wealth from successful enterprises. So to me, in the future, like this debate that everyone keeps having is going to be mute, because just the way markets are going to evolve, if we allow them to evolve freely, we'll get there and address all these concerns.
Right. So I'm looking at this one coin right now, and I think it's called Cardano.
Mm-hmm.
Which are you familiar with this one?
I am familiar with it, not like deeply familiar with it. I know it's one of the ones that's like kind of popular.
Like apparently it's got like it offers interest.
Mm-hmm.
How does that work? Because I'm thinking, I mean, is it like if you hold on to a coin, the coin multiplies?
Maybe it depends. I've seen different blockchains do this differently. Like sometimes they do it through staking. So basically, you get interest if you stake your coins. So kind of like I have like a whole lot of waves, and I stake them on the Waves blockchain. And so instead of it being like proof of work, where basically it's like a bunch of computers competing, like the way I always imagine proof of work is that there's like a treasure chest, and there's like a bajillion computers trying to guess the password to that treasure chest, and who gets it first. Proof of stake, it's more like you volunteer to keep your computer on and process transactions. You don't have to guess any numbers, so it's less electricity intensive. But the idea is that since you hold the currency, you're getting certain like a certain number of like lottery tickets, and depending on the more currency you have, the more lottery tickets you have, and you might win the next block. Some what they do, but some they just distribute it evenly. They just say, hey, no matter long as you stake it, everyone gets to share in sort of all the transaction fees, long as you're staking. In that case, it becomes like interest. So the more used that blockchain is, the higher the interest rate is. Sometimes they do it at a fixed rate.
Because I guess that's kind of how I imagined it when I heard about this. And, my question to that is, which kind of leads into another interesting hypothetical proposition too, is if, let's say you have 1 million people and they all hold one coin and you're going to give them interest by saying, okay, now you all have 1.1 coins. You have this, the ratio of the amount of currency per person is still the same. And I think this also kind of relates to, like you could look at the value of $1 and compare it to the size of a population, right? So if there's a certain amount of scarcity where if everybody's trying to chase this same dollar, it's worth more because there's more people. And so if the population size doubles, now that dollar's worth even more because you've got twice as many people trying to fight for that same dollar. At the same time, if you cut the entire population down to 10%, then all of a sudden it's the ratio of people to money. Mm-hmm. And what I see as interesting is if you were to just give anybody who's holding onto a currency, you instantly get a tiny bit more. It's almost like you're inflating the currency, like whenever the Federal Reserve prints money, except instead of going to a special elite, it goes to everybody that's already holding it. So you're continuously inflating it, but you're inflating it so equally that the inflation doesn't really benefit anyone at all, which I think is it's fascinating, but at the same time, what's the point of it if there's no benefit to it?
Well, it's the same thing people say about stock split, because a stock split is essentially the same thing, where basically you still have the same amount of percentage of the company that you have, but the price goes down, and that makes the individual units more marketable to people who didn't have them before. So that could be same thing there. I mean, oftentimes with currency, another reason you might want to increase the units is just so that way there's more units to go around. So for example, if there was only $1 in the whole world, technically the value of the total currency is still the same. It can buy the same amount of stuff. The total dollars can still buy the same amount of stuff that total dollars could buy before, but it's much harder for us to be passing around $1 than passing around $1,000. So there is sort of a practical value in having sort of enough units to pass around. But with cryptos, again, they are divisible by several decimal points, so that usually isn't too much of an issue. But also another reason why I would assume a crypto would want to have some sort of little bit of inflation is just because of the way the protocol works. You'll end up with a lot of dead coins because you wire something to the wrong address. That coin's dead now, never to be resurrected again. So having a mechanism.
I lost so much money that way.
Yeah. So having a mechanism to make up for dead supply is not necessarily bad, because I mean that's the thing with Bitcoin. You send the Bitcoin to the wrong and accidentally to an Ethereum address. Well, now that's 44 grand now. That's never going to be touched again.
Right. Right. No, that's a good point. That is, and that in itself is deflationary. But as it's replaced with new currency, it balances itself out.
Yeah. There's different mechanisms. I think everyone in different cryptocurrencies are still trying to figure out sort of the right incentives, because you also have this issue, you pay people interest and they hold the currency and they don't transact because they want to continue getting the interest. So then you have this, so you get more people to buy it, but then you discourage sort of the use of it as a currency. So there's other ones that are called proof of burn. There's another protocol I've heard where basically you actually reward people for using the currency. So who gets paid out the next block based on who's spending it more or who's transacting more regularly, to encourage more transactions.
This is fascinating too, because it's it's totally different, but it's so much the same as just old banking systems. If you stick your money in one account, it's going to reward you by paying you interest. Right? You lock it up in a CD, you're not going to touch it. They're going to pay you interest. But then you've got your credit cards, which are saying, hey, every time you spend $1, you get your cash back rewards or your extra miles or whatever. That's really fascinating that this entire new technology. I'm learning so much about this. I thought I knew everything about crypto. This is really fascinating. But yeah, that's it really is and it's giving us all these alternatives, right? I mean, even with credit cards, oh, well, I don't want cash back. I just want rewards miles or, you know, whatever.
Mhm.
You have a free market to decide which one you want to use. And I think that's really great about crypto, because like you were saying, it's, you know, it's you have an opportunity to like to save your money in one, as, you know, long-term storage, to use another one for conducting transactions. And I find it fascinating. People are always asking me, especially because I'm running for office all the time, like, oh, well, would you get away with, would you get rid of the dollar? You know, what would you do? Would you go back to a gold standard and all this stuff? And like, my answer is really always like, no, I would just get rid of all the regulations that prevent people from using one or the other, or that make it difficult or illegal to transact in one currency, because ultimately there's really nothing wrong with fiat. I mean, there's things about it that I don't like. I don't like that you've got these central bankers who are able to print money out of thin air, but like, that doesn't even bother me so much as the fact that the government is forcing me to use that currency. If I wanted to use that, if I wanted to like put all my money in crypto, and if it was easy because I could go anywhere and there were no laws or restrictions against anybody for trading crypto for dollars, I might use dollars. I mean, I like having paper, right? It's easy to like carry around. It's less traceable than Bitcoin or any of these others. It's convenient. If the internet goes down, it still works. There are benefits to it. It's not perfect, but if we eliminated that that monopolistic type control, you might actually have, because I mean, here's the thing with Bitcoin, right? One of the reasons it's so valuable is it's not like they're just like, you know, shitting out 1,000 coins a minute like what Doge is doing, which is why Doge's price is much lower. And that's one of the things that people look to it and say, yeah, this is amazing because it preserves the scarcity. And so if the United States wanted their dollar to be valuable, and there were no regulations, they were prohibited. I know this is a nice fantasy I have. They were prohibited from forcing everybody to use their currency. Then they would have to, if they wanted to increase the value of their currency, they would have to treat it. They would have to treat it in such a way that they didn't devalue it all the time themselves. They would have an incentive to make it more valuable, because they can't just point a gun at everybody and say, no, you got to use it.
Yeah, agreed. Although like the incentives are so messed up right now because the government has so much debt, they have a lot of incentive for it to be worth less. So like they'd be thrilled with it being worth less. So they're definitely doing their darndest. I totally agree. Like at the end of the day, like everyone always talks about abolishing X, abolishing Y, abolishing Z, and I agree with the ultimate goal and all that stuff in the sense that, but it's like if you just give people a choice, if you allow there to be choices, people will eventually choose something better. Something better will eventually exist. It's just creating the space for those alternatives to exist, or just enlightening people to thinking outside of the box and look for alternatives. And and that's why technology fascinates me so much. To me, it's like financial technology, communication technology, and transportation technology. Those are the three things that are going to free us, because the more we're all able to communicate and speak with each other, the more we can hold everybody, all oppressive forces accountable. The more we can travel, the more we can move away from oppressiveness. And then three, the more we can manage our finances and basically interact in markets with as little sort of central management as possible, the more we can survive and live without some sort of, paternal institution managing everyone's lives. So those three things over time. And the thing is that like that sort of like stateless utopia, it's going to be something that happens. We're not going to even notice when it happens, because the world's we're just going to be used to living life that way. It's just going to be some sort of slow technological evolution. We're not going to notice that, hey, almost everything we're doing, we're just doing it based on the choices that we make, because the technology has made the demand for government obsolete. And a government may still exist in name, but it'll be feckless and powerless because there is no demand for it to have power. And that's kind of how I see things playing out. So to me, like the most important thing to me, like one is encouraging people to be nicer and kinder to each other, because that'll also move in that direction. But two, also protecting the space for innovation and technology, and really sort of encouraging adoption of new technology, because those different forces, a kinder, gentler community, and the technology that allows us to sort of run away from things that aren't that, will allow us to sort of find that sort of, I don't know. Well, there's no ideal, there's no utopia, but sort of that place that can be someday.
Awesome. Yeah, that's amazing. You got me thinking about so many different things now, especially when you talk about freedom of movement, and they want to government, of course, wants to stay in control, and they're always shutting down borders. They're controlling transportation, licensing, restricting it. I think you're absolutely right. The more freedom we have, the less control they have, and that's one of the things that scares them into wanting to control all of that behavior.
That's why I can't wait for teleportation. That like borders won't exist anymore.
Right.
Like, what's border patrol going to do when you can teleport?
Right. Awesome. All right. Well, Alex, it's been awesome having you on. People want to learn more about you, what you're working on, any projects you're working on you want to plug, go for it.
Sure. I mean, I still do the podcast. I hope to be sort of more like visible doing libertarian things soon in the future. It's just my career. Like I started this like new career in programming at the beginning, I started training in late 2019 and kind of jumped into it early 2020. So that's kind of been my focus. So I've been doing working as a training people in programming. I've been working as a programmer and also doing my YouTube channel and podcast in coding. So it's all at alexmercedcoder.com. Now over like 1,000 videos on coding. It's been a pretty fun journey. And then of course, like there's the thousands of videos I have on libertarianism and economics and whatnot on my other YouTube channel. And you can find everything at alexmerced.com. Do subscribe to all my podcasts, the coding one and where I just rant about politics and economics. There's also the YouTube channel. And then there is merchandise. So if anyone wants like merchandise with my high school photo, it exists. And then otherwise it's so nice to like talk libertarian shop again. It's been a while, and this has definitely been a nice opportunity to do so. And it kind of reminded me what I love so much about it.
Awesome. Well, it's been great having you on. Thank you so much. And of course, if you're watching the show, if you like what you heard, and even if you didn't, make sure to share this with your friends. Invite them to watch and learn. Subscribe, comment, like, do all that fun stuff. And this is available also as a podcast. So make sure you go wherever you get your favorite podcasts and look for Taxation is Theft. It's the big black and yellow. You can't miss it. And of course, head over to taxationistheft.info and make sure that you buy all of our amazing swag. And I do want to take 1 minute to plug what's going on next week. If you're in the Austin area, we're having a rally on the 20th. It is the rally to free healthcare. Yes, free healthcare, like free Nelson Mandela or free Julian Assange. I know Mandela's already out. No, he didn't die in prison. That's a myth. We're also, I'm going to be traveling all around Texas to kick off the campaign with a little tour. I'm going to be in San Antonio, Austin, Houston, and Dallas. So make sure you follow my social media. I'm on Instagram at Dan Berman, on Twitter at Dan for Texas, and on Facebook, look for Dan Taxation is Theft Berman. Follow me there. I'm going to be popping up all over the place, probably do a couple meet and greets. If you're in the area, it would be awesome to meet you, shake your hand, talk to you, and I guess cough COVID all over each other. I'm kidding. Don't do that. But until next time, taxation is theft. Alex, again, thank you so much.
No problem.
See you next time.
Thank you.